Are there credits or deductions for caregivers that should be considered? And what are the rules and limitations involved with that?
Sure. So there are definitely both credits and deductions. And before I get into some of the bigger picture ones, let me just talk about what the difference in between credit and deduction is. So generally speaking, credits are more powerful than deductions because credits can offset dollar for dollar taxes. Deductions are offsetting your income. So when you think about how you get to your final tax due amount, you have your income less your deductions, that taxable income number, and this is big picture, right. You would take that taxable income number, multiply it by your tax rate, and that gets into a whole other conversation that we won't get into here. But that tax rate, taxes due, you take that taxes due less the credits, and that's what you would actually pay. So deductions are not as powerful as credits.
Okay.
So when we're thinking about what caregivers can benefit from, we really want to start looking at the credits because that's where you get the most bang for your buck. There's two big ones, and the rules for this have changed significantly. They were much higher for 2021 only. For 2022 and forward, they're about half of what they were in 2021. The first one is the credit for other dependents. And so this is a counterpart to the child tax credit. If you know people that have children that benefit from that one, the credit for other dependents is really for, think of anyone that has dependents that aren't children. So broadly, kids 17 and over, or in the situation that we're talking about, if you have aging parents or other people that you're taking care of where you would claim them as a dependent, then you could look at this credit for other dependents. It's $500. So the $500 credit can offset dollar for dollar $500 worth of taxes that you owe. So it can be really powerful. And that, again, you would look to the dependency rules that we talked about previously. And if that person qualifies as your dependent, then you qualify for the credit. There's another credit available, and this one is a little bit more broad. In my world, I more see it when you have parents whose children are in daycare, but if you have aging parents where you need someone else to help take care of them while you work, you could look at the child and dependent care credit. And so the difference in between the credit for other dependents and child and dependent care credit, the crucial part of the difference there is the care. So if you are paying for the care of the person so that you can work, then you would want to look into this credit. The credit there, the way it's calculated, you would look to the qualifying costs. So if you have a caregiver come to your home to take care of the aging parent or that type of thing, up to $3,000 per person or $6,000 for two or more dependents is the qualifying costs that would be eligible for the credit. And then the credit is 20% of that amount. So if you're talking about $3,000, 20% of that credit, $600 is your credit. And so there again, the credit, it's money that you're spending anyway. So if you can get the credit for the money that you're spending anyway, it's a good deal to have for tax purposes.